Good day, everyone, and welcome to the premium video newsletter for Thursday, August 29th, 2013. Right now, the added volatility that we're seeing has many traders very nervous about the current market conditions. I'm going to tell you the same thing that I've been telling traders who've been contacting me during the last few days. Tuesday, the market was absorbed by Syria. Wednesday, it wasn't as bad. And today, the market was mostly reacting to fundamentals. So things are moving in the right direction. Let's start off with the fundamentals and we will work our way into the technicals from there. A lot of traders' attention was on economic data that came out before the opening bell. And as I said, this is a positive sign. The US economy grew at a 2.5% annual rate from April through June, faster than previously estimated according to the Commerce Department. The figure was revised from 1.7% as more US companies exported goods. Also, the Labor Department said that the number of people who filed for unemployment benefits last week fell to 331,000. That's the fewest number in 5 years. So we are making improvements and things are getting better. While lower unemployment claims and an upward revision in the GDP are both positive signs, most of Wall Street attention was focused on next week, when the August job report will be released. The Federal Reserve is expected to decide the fate of the bond buying program by mid-September, and the August jobs report will be the last bit of data the central banks will have to work with before making their decision. Technically, the broad market was mostly focused on the positive reports today. The downside is that we're still below the moving average. However, we have more positive news today, and we have a higher opening and a higher closing. We didn't break the low today, and we did in fact break yesterday's high. These are all bullish indications. We crossed and rallied above the 1640 level, so the next level up is 1660. The action we saw today in the broad market extended to most subsectors and spilled over into the NASDAQ index. I discussed during the last few days that since we're still above the 50-day moving average, the index is still officially in a bullish stage. And if we continue to stay above the 50-day average and fill the gap to the upside, the index will look extremely bullish once again. Well, take a look at today's trading action. If you didn't know anything about Syria, you probably wouldn't think anything out of the ordinary is going on with this index. What I'm particularly happy about is the fact that we began filling the gap between 3630 and the 3652 level. The next question is the key, and this is how high are we going to go? The two areas you should pay attention to is the 3685 level to the upside and the 3575 level to the downside. I'm actually concerned about both levels because I'm not certain we will rally to a new high during the second half of the year. But that doesn't mean I'm expecting a crash either. The Feds are doing everything in their powers and then some to keep the stock market afloat and healthy. So let's get past Syria and then we won't worry about overhead resistance at the 3685 level. Briefly, I wanted to review crude oil as I alerted you yesterday of a very possible top formation. It looks like the setup is moving perfectly down. Unless we hear more from Syria in the next few days, expect this drop to escalate to the 106 and then to the 104 level. I'm fairly confident that we will get there if nothing comes out of Syria in the next few days. The next market I'd like to look at is the US dollar, which is actually gaining today due to the positive economic news. The breakout we saw to the upside actually looks strong. Here's the story behind today's rise. If the economic conditions improve and the Feds discontinue the stimuli, US will have a tighter monetary policy. This in itself will strengthen the dollar. And the news that we saw today from the Feds suggests more so that the economy is in fact improving. And the better the numbers get, the quicker the Feds will stop spending $85 billion each month to keep US afloat. Another technical indication that the dollar may be getting stronger is the fact that the lows are getting higher. Look for the 82.50 area for the next level of resistance. And although I'm beginning to get bullish, because each day we are closer to a tighter policy, we have to be careful that the 81 level is not violated to the downside. If it is, we will most likely go down another level from that point forward. Let's take a minute and talk about the gold market. First, it looks like gold is having trouble getting past these levels. One thing I'm noticing is the volatility is not picking up. You can tell this is the case because bars are narrow and not getting wide like we are seeing in other markets right now. Moreover, the RSI is beginning to reach overbought levels as well. And finally, most markets are not reacting to Syria the way we did a few days back. So unless we see something in the next few days, the gold market will be moving down. The next two levels we need to watch are the 1350 and the 1300 level. If you trade stocks or ETFs, GLD is the one to follow. This market and the crude market are the most sensitive to Syria right now. And both are telling us that we're moving lower. Incidentally, I'm sure you've noticed that the setup we're seeing on gold is identical to the one we're seeing in crude oil. Finally, the euro currency as well as the pound broke down during the previous trading session. The key level to watch on the euro is the 132 level. You can see that during the past month we built a strong support around that level. Notice each time we approach this level we quickly bounce off. This demonstrates that there's a lot of emotional support around this level, and this means that there's a lot of stop orders around these levels as well. Therefore, if the market begins coming down, there's a very high chance that these stop orders will trigger and we will begin to see panic selling. The reason I'm bringing this up right now is because something is changing with the US dollar. It's getting stronger. And if, and this is a big if, money starts flowing into the dollar, long term, it will feed on itself and the euro will sell off. Let's watch the 132 level over the next few days and see if we can bounce off the 132 level within the next 24 hours. There's only one setup for tomorrow, but it's a really nice looking tail gap on Verizon, which is one of the top wireless telephone carriers in the States. Enter on a short 15 cents below today's low, which was at 47.57. And if filled, place a buy stop 15 cents above today's high, which was at 48.66. That's it for today's tutorial. I will update you tomorrow, and keep your eye on tomorrow's personal income report before the opening. It will cause volatility in bonds. Have a great day, everyone.